Hi, everyone, and thank you so much for joining. We are going to wait another moment or two to give some more people time to log on, and then we will get started. In the meantime, if any of you would like to create your Savi account now, you can do so by scanning this QR code and searching for your employer's name. Feel free to create your account or hang out for another moment or two, and we will get started soon. Once again, for those of you that are just joining, we are going to get started in about one more minute just to give a few more people time to log on. Alrighty, well, in the interest of time, I think we can go ahead and get started. So thank you so much, everyone, for joining today. I appreciate your time, and I am looking forward to a great workshop. Just a couple of housekeeping things before we dive in. We'd like to let all of you know this is being recorded, and informational materials will be available afterwards. We are recording this webinar. We will post that recording on our YouTube channel, and we will send out the link to all of you in our follow-up email. That follow-up email will go out tomorrow and will also include some additional info to help you get started with your Savi accounts. If you have any questions during the workshop, please feel free to put those in the Q&A. You can click the Q&A button in the Zoom menu, and I am joined by some of our support team members who are helping to answer your questions during the presentation. Finally, if you need closed captions, I am sending a link in the chat with instructions on how you can turn those on. So during today's session, we'll start off with some quick introductions as to who Savi is and what we do. We'll then spend most of our time talking about the basics of federal student loans and important policy updates that are impacting borrowers. After that, we will wrap up with how you can get started with your Savi account so that everyone is ready to go once we wrap up. So thanks so much for being here today. My name is Jobe, and I am really excited that you're here so that I can help you to understand these student loans a little bit more and talk to you about how Savvy can make managing them even easier. For those of you that are new to Savvy, here's what you should know about us. First and foremost, we want to let you know that you are our top priority. We like to say that we serve student loan borrowers, not student loans. So we want to ensure that we are doing everything we can to support you and that these loans are not a burden for you. We've also got insider info that helps us to help you. Our team has over 2 decades of expertise, and many of us are also student loan borrowers ourselves. I too have student loans, so I know firsthand what it is like to have them, and this information helps all of us to better serve you. Finally, saving has never been easier than it is with Savvy, because within your Savvy account, you'll be able to see personalized repayment and forgiveness options, helping you to explore ways to lower your payment and take advantage of any and all savings. Savi is your student loan benefit, and we work by partnering with employers and membership organizations to offer our services. We are your exclusive student loan benefit, and we can help you with any and all things student loans. We like to say that no concern is too big or too small. And the great news is we are also available for your family members. So if anyone in your family has student loans, maybe you're joining this workshop to get some info for them, the great news is that they can sign up just like you and get help with their unique situation. It's our goal that by Savi and TIAA working together, we can help all of you to find the best outcome for your loans. So, enough about us. Let's now jump in and talk about the basics of federal student loans. These are sort of the building blocks of everything we do here at Savi. So, we will talk about some of the terms that we use and some programs that can benefit you. In this section, we will talk about student loan servicers, the different types of loans that are available, income-driven repayment plans, and public service loan forgiveness. Again, if you have any questions during this time, please feel free to throw those in the Q&A, and we will be more than happy to try and answer them for you. So taking a look at student loan servicers, these are companies that manage student loans on behalf of the Department of Education. For most borrowers, these companies are your first point of contact when you're working with your student loans. These are the ones that you submit your applications to, you make your monthly payments to them, and they handle all of the day-to-day administrative work. You can see some of the most common servicers are some companies like Nelnet, Ed Financial, or Advantage. One of the first questions that we receive from borrowers is, can I qualify for these programs if I am with, say, Mohila, or am I able to enroll if I'm with Ed Financial? And the great news is that these federal programs are available across all federal loan servicers, meaning that you don't have to be with a specific one in order to enroll. You can enroll at any one of these servicers. The key factor that determines your eligibility is what type of loans you have. So let's look at those. There are quite a few loans that are available, but in general, it can be broken down into two broad categories. There are federal student loans, which are highlighted here in green, and there are private student loans, which are here in gray. For all of the work that we do here at Savi, these are federal programs available for federal loans. So as long as you have a loan that is highlighted in green, you could be eligible for these programs. The first federal loan that we will talk about are direct loans. This is the current loan program offered by the Department of Education, and it started in 2010. So if any of you have loans after that date, you probably have direct loans. This can also include direct consolidation loans. So if you have older student loans from before 2010, but you consolidated, your loan would be converted over to direct and you would have a direct consolidation loan. The great thing about having direct loans is that they are eligible for programs like income-driven repayment plans and public service loan forgiveness. You're actually required to have direct loans in order to enroll. So by having direct loans, you've already met one of the necessary requirements for enrolling. Before direct loans, there were FFEL loans. This stands for Federal Family Education Loans, and we call them FFEL loans for short. They are an older type of student loan. So if you have loans from before 2010, you likely have FFEL loans. If you do have this loan type, it's important to note that it is only eligible for one of the income-driven repayment plans. If you would like to make your loan eligible for all of the plans and eligible for programs like PSLF, you'll need to consolidate it. Typically, when we hear the word consolidation, we think of combining multiple loans into one. While this can still be the case, the primary reason for consolidating in this instance is that it converts your loan into a direct loan. When you consolidate a FFEL loan, it will be converted over and issued as a direct consolidation loan. This way, you can make your loans into direct and become eligible for these programs. The last type of federal loan are plus loans, and there's actually two different plus loans that are available. The first, which is a parent plus loan, I think is one of the trickiest loans that we work with. Lots of borrowers have questions about these loans, and there's some additional requirements that apply just to this type. So if you have a Parent Plus loan, here's what you should know about it. First, a Parent Plus loan is a loan in the parent's name that was taken out to pay for the child to go to school. Because it is in the parent's name, this means that everything is based on the parent's information. Repayment on an income-driven plan will use the parent's income, and forgiveness under programs like PSLF will be based on the parent's employment. There is not currently a way to transfer a parent loan to the student. The Department of Education considers that the parent's responsibility. So if you do have a Parent Plus loan, you'll need to consolidate it if you want to be eligible for these programs. When you consolidate it, it will be converted into a direct consolidation loan so that you can become eligible. In addition, Parent Plus loans can only be paid on one of the income-driven repayment plans. So because of all of that extra info of being in the parent's name, requiring consolidation, and only being eligible for one repayment plan, that's why those parent loans can be a little bit trickier. Grad Plus loans, on the other hand, are pretty straightforward. It's a loan that you used to pay for your own graduate or professional program, and it's considered a direct loan, so it's eligible in its current form. So those are all of the federal loan types. The key takeaway is that the goal is to have direct loans so that you can be eligible for these programs. If you have FFEL loans or Parent Plus loans, you can consolidate them and convert them over to direct. That brings us to our final loan type, which are private loans. These are any non-federal loans made by lenders like banks, credit unions, state agencies, and even schools themselves. Unfortunately, if you do have private loans, they are not eligible for any federal repayment or forgiveness program. This means private loans cannot be paid on an income-driven plan, and you cannot receive public service loan forgiveness. Only federal loans can qualify. So I know that's quite a bit of info to take in. Some people know what types of loans they have, others don't and have no idea where to start. The good news is that Savi is here to identify what type of loans you have and help you take any necessary steps like consolidating. And the second half of our presentation will show you how you can take steps like that in your Savi account. For now, though, let's talk more about income-driven repayment plans, or IDR plans. IDR is a category of repayment. Within that category, there are four different plans that are available. These are Save, Pay, IBR, and ICR. Each one of these plans has different eligibility requirements and calculates your payment a little bit differently. You may be eligible for all four plans. You may only be eligible for one. No matter what, though, your payment is going to be based on your income and your family size, which makes these plans more affordable and typically provides a lower payment than the standard plan. Depending on which of these plans you enroll in, your payment will be somewhere from 10 to 20% of your discretionary income. So for these plans, the Department of Education looks at your total income. They set aside a portion of it to cover the cost of living, and the leftover amount is called discretionary income. And your payment is only based on that leftover amount, which helps give you that lower payment. So for example, say that you're single, you have no dependents, and your income is $52,000 a year. You could expect to see a monthly payment of about $160 by enrolling in an income-driven plan. These are great options for borrowers who have very high loan balances or low income. Some low-income borrowers can even be approved for a $0 monthly payment. So if you have little or no income, you can get this $0 payment where you are not required to make payments on your student loans, but they stay in good standing as if you were making payments. And any month with a $0 payment counts towards forgiveness. And when you enroll into these repayment plans, you'll be approved for a payment amount for up to 12 months. Once that time has passed, you will need to recertify your income. This way, if it has changed, your payment can be updated and stay at the 10 to 20% range. One question we get from borrowers is, well, what happens if my income changes before it's time to recertify? If your income increases, you can keep your lower monthly payment and wait until your recertification date. If your income decreases, though, you can actually recertify early so that you are never paying more than 10 to 20% of your income and your payment can be lowered to stay affordable. So, with these income driven repayment plans, there is a way that you can receive loan forgiveness through them. When you enroll, you'll have a repayment period of 20 to 25 years. Once you have paid for the required amount of time, whatever balance you still owe is completely forgiven, including interest. Because these repayment plans forgive your remaining balance, this means that the less you pay, the more you get forgiven. If you see a low monthly payment or even a $0 payment and you're thinking, well, I'm not going to see my balance go down if I'm only paying this amount, that's perfectly okay. That just means you're going to get more forgiveness down the line. So, how long you have to pay for depends on a couple of factors, like which plan you're on, and sometimes even your loan types or when you took your loans out. You can see here the timeline to repayment under each of the different plans. 20 years for pay, 20 or 25 for IBR, and 25 for ICR. The other great thing about this is that no application is needed to receive this forgiveness. Once you've enrolled and paid for the required amount of time, the balance is going to be automatically forgiven once you have met this 20 or 25-year threshold. So just like with loans, I know that this can be a lot of info to take in, but the good news is that Savi is here to help you see which of these plans you qualify for, see your potential monthly payments, and how much forgiveness you can get. And we're going to show you how to do that coming up soon. In the meantime, though, let's wrap up our basics section by talking about Public Service Loan Forgiveness, or PSLF. Many people have heard of this program, but you might not know all the requirements that go into it. So I'm going to break them down for you. The first and perhaps most important requirement for this program is that you need to work at a qualifying employer. A qualifying employer is either a government organization or a nonprofit. So you can work at a federal, state, local, or tribal government. If you don't work at a government organization, you can also work at a not-for-profit 501c3. As long as your employer is one of those types, you could qualify for this program. So the great news is that this program is not based on your job role. It's based on your employer type, meaning any type of employment with these organizations could qualify. With that said, you do need to work at least 30 hours per week. PSLF requires that you be a full-time employee, which is anyone who works 30 hours or more by their definition. If you are working below 30 hours, there's still some ways that you can qualify. If you work for multiple employers at the same time, you can stack that employment and show that you work a combined total of 30 hours. If you are, say, an adjunct faculty member, you can multiply the number of credit hours you teach by a credit multiplier so that you can get over the 30-hour threshold too. So requirement number one is that you need to work at least 30 hours a week in public service. Requirement number two is that you have to have qualifying loans. Before you can enroll into PSLF, you have to have the correct type of loans, which are direct loans. These are the only loans that you can have if you want to enroll in this program. So if you have non-direct loans like FFEL loans or Parent Plus loans, you need to consolidate them before you can enroll. This will convert them over to direct, making you eligible. Finally, the third requirement is you need to pay your loans on a qualifying repayment plan. For your payments to count towards PSLF, you have to pay on one of the four income-driven plans that are available. As long as you're enrolled making your minimum monthly payment, it will count towards forgiveness. This last requirement is extra beneficial for a couple of reasons. Because one, enrolling in an income-driven plan is going to give you immediate savings by lowering your monthly payment. But two, it's going to give you a backup option. If you meet the requirements for PSLF, you could get this forgiveness in 10 years. But if something happens, maybe you no longer are eligible, every payment that you make towards PSLF will also have counted towards income-driven forgiveness, which will forgive your loans after that 20 to 25-year period. So it lets you get immediate savings and helps you have a backup forgiveness option. So in order to actually receive forgiveness under this program, you have to make 120 payments on your loans that meet all three of those requirements. This means every payment you make must be done while working in public service, while you have direct loans, and while paying on an income-driven plan. If you make a payment that does not meet all three of those requirements, it might not count. This also means that simply working in public service will not let you qualify for forgiveness. You must be actively working and making payments in order to qualify. Once you've made those payments, though, the entire remaining balance is completely forgiven. So this is just like that income-driven forgiveness, where it forgives your remaining balance after you have met the requirements. So you're probably thinking 120 payments is a lot of payments to make. Many people have gaps in their repayment history. They maybe make a payment that doesn't count, or they switch employers. That's perfectly okay. This program is based on your cumulative payment count. So once you reach 120 cumulative payments, you would then qualify for forgiveness. Because they don't need to be consecutive, that means it could take you longer than 10 years to earn these 120 payments. However, at a minimum, it is 10 years before you can qualify. You cannot make extra payments to qualify sooner, and they will only ever count one payment per month. So, how can you enroll? This is done by submitting a form called an employment certification form. This is a form that is signed by you and your employer to prove that you work in public service. When you turn in this form, they will go through and look at every payment you made while working at that employer. For every payment that meets all the requirements, it will be added towards your total and counted towards the 120. They only look at payments that overlap with employers you've turned in forms for. So if you have worked for multiple employers, you'll need to turn in a form for each one of them to get credit for every payment. These forms are retroactive, so they give you credit for payments that you've already made. If any of you have been working in public service and making payments on your loans, there's a very high chance that some of those payments can count, and you should turn in this form to get credit for them. Once you turn in your first round of forms, you'll get credit for all the payments you've already made. Moving forward, we then recommend submitting a form every 12 months until you reach the 120. Technically, you can wait till you make all your payments to apply, but that leaves you tracking down employers from over 10 years ago, and it's more likely that you could get off track or something could be missed. By turning in forms now and then once every 12 months, you can ensure you get credit for every payment you make and track your progress towards forgiveness. So just like with all the other programs, there's a lot of info to take in. And if you're sensing a common theme, it's that Savi is here to help. So we will be able to help you determine your eligibility, take any necessary steps to become eligible, and even apply to enroll in PSLF. And we're going to show you how to do that a little bit later in the workshop. Now, though, let's move on and talk about a couple of policy updates that are impacting borrowers. So we're going to talk about some account adjustments and some updates that are happening to the Save plan. As you've seen with these programs, there are quite a few requirements that you need to meet. And historically, borrowers have struggled to meet all of those requirements. In response to this, the Department of Education is conducting some one-time account adjustments. What they are doing is they are going to be going through everyone's accounts and giving you credit for past payments that did not previously qualify. This will help put you closer to the finish line for forgiveness under both PSLF and income-driven forgiveness. So essentially, you'll be able to get credit for any past payment you made, even if you made that payment partial, late, while you had the wrong type of loan, or while you were on the wrong repayment plan. It will all be updated as if you were meeting the requirements so that you can get closer to forgiveness. You'll also get credit for certain forbearance and deferment periods. The adjustments have already started and are expected to continue throughout this year. They are automatic, but only for borrowers who have the right type of loans. In order to be included, you have to have loans that are held by the Department of Education. So Savi is recommending that anyone who has FFEL loans or Parent Plus loans consolidates to be included. By consolidating, you can convert your loans into direct, be included in these adjustments, and get credit for all the past payments that you've already made. The important thing to take away here, though, is that the deadline to consolidate is June 30th, which is this weekend. If you have these loans that require consolidation, you have to submit your request before this date, or you will not be included in the adjustments. It's okay if your consolidation is still processing. As long as you have submitted the request, you'll be included in the adjustments. If you don't know what type of loans you have, we encourage you to check that in your Savi account and see if you require consolidation. We will notify you if you require consolidation, and we can provide you with some instructions on how to submit that request. Requests to consolidate are submitted to studentaid.gov and only take about 5 minutes to complete. And wrapping up our policy updates, let's talk about the SAVE plan. This is a new program, or excuse me, a new repayment plan that was released by the Department of Education last year to lower payments for borrowers. The SAVE plan is available to enroll in now, and these are some of the current benefits. One of the biggest is that it covers any unpaid interest. We've heard time and time again of borrowers who enroll, do what they're told, and make their minimum payments, but their balance just kept going up. In response to this, the Department of Education created an interest subsidy for the SAVE plan. When you enroll, if your monthly payment does not cover all the interest that accrues, the Department of Education covers the rest for you so that your balance does not increase. It's important to know that this does not change your interest rate or any past interest that has already accumulated. Moving forward, if there is any unpaid interest, they will pay the rest of it for you. In addition, the SAVE plan has some pretty generous rules for how payments are calculated. Under the SAVE plan, no borrower who earns less than $15 an hour will have a monthly payment. Borrowers who earn more than $15 an hour will still see savings, since less of their income will be counted when calculating their payment. Even if you're already enrolled in an income-driven plan, you could save even more by switching over to SAVE. I'll talk more about this on the next slide, but one proposed update is that borrowers with lower balances will get forgiveness sooner. As I mentioned, the SAVE plan is already available, and anyone who has direct loans is eligible. If you have FFEL loans, you can consolidate to become eligible for SAVE. It's important to note that the only people who do not qualify are borrowers with Parent Plus loans, since the rules state that those can only be paid on the ICR plan. So all of those benefits are available right now. Soon, there are some proposed changes that could take effect with this SAVE plan. So one of these changes is that borrowers with lower original balances will be eligible for forgiveness sooner. If your original principal balance was $12,000 or less, you would qualify for forgiveness after only 10 years of payments. As your balance increases, so does the timeline to forgiveness. There is a maximum repayment period of either 20 years for undergrad or 25 years for grad loans on the SAVE plan. In addition, as part of these changes, payments would be lowered for some borrowers. If you had only undergraduate loans, your payment would be reduced to 5% of your income. If you have grad loans, you would stay at 10%. Anyone who has grad and undergrad would be between 5 and 10% based on the breakdown of your loan types and balances. So these changes, as I say, are proposed. They were scheduled to start soon, but we have a very recent update for you as of 1 day ago. An ongoing lawsuit did put these changes on hold, and we are eagerly awaiting some more updates. We expect there to be more updates very soon in the coming days, and if anything changes with the timeline of implementation, we will be sure to notify you. You can still enroll and save and take advantage of the benefits that are already in place. And once we know more about the implementation of these proposed changes, we will be sure to let you know. Alrighty, we're at about the halfway point, so I want to take a break to look at the Q&A and see if there are any common questions that we can answer out loud. After this, we will then move on and talk about how you can get started with your Savi account and how Savi can help you to get enrolled into all of these programs. I see one question. Someone says, I worked at a company part-time, but I worked over 30 hours. Can I still submit a form for that time that was in the past? Yes. So just to clarify a little bit, PSLF requires you to be a full-time employee, which by their definition is anyone who works 30 hours or more. Even if you are considered part-time by your employer, as long as you're working 30 or more hours, you can qualify. And again, even if that time was in the past, you can submit that form now and get credit for those payments. Where can I find the direct consolidation application? You can consolidate by submitting a request at studentaid.gov. The studentaid.gov website is the website for the Department of Education and their student loans. That request takes about 5 minutes to complete. And with Savi, we can provide you with instructions on how to submit that request. I see someone asking about the COVID payment pause and how that impacts things. From March of 2020 through October of 2023, payments were paused due to COVID. The great news is that all of those paused months will still count towards these programs, meaning that paused months can count towards income-driven forgiveness and PSLF. The months will be automatically calculated towards income-driven forgiveness, and you can turn in an employment certification form to get credit for that time for PSLF. How do you know if you have direct or FFEL loans? You can add your loans to your Savi account and we will confirm what type they are. Once you've added your loans, we will take a look at them, notify you if you require consolidation, and we will help you to complete that process. I know our support team members are answering some of your questions directly, but I do just want to make sort of a broad statement. I see a lot of people are providing details about their specific situation, wanting to know, what their options are, what their payment is, and if Savvy can help. The Savvy tool and our website are designed to get your info and provide you with results that are customized to your unique situation. So you can enter your info, and the results that you see are going to be based on your unique situation. It will look at your family size, your employment, how long you've been paying for, take all of that into account so that the options you see are exactly what is available for you. So if any of you have questions about what is available for your specific situation, I would really encourage you to access your Savvy account, add that info to your application, and check out the results page. Can I still get my form signed if my employer in the past will not complete my form or if they closed? Yes. Typically, the best way to get that form completed is to get it signed. But if you are unable to get it signed, there are still some additional documentation you can submit to get credit for that time. Uh, so that can be things like pay stubs, W-2s, things like that to document that you were working for an eligible organization. What happens if I retire? Does this mean I'm no longer eligible? So if you retire before you receive public service loan forgiveness, unfortunately, you would no longer be a candidate for that program. You have to be working 30 hours or more while making your payments and up until you receive the forgiveness. If you do retire, typically your next best option is an income-driven repayment plan and to pursue income-driven forgiveness. Keep in mind that if you're retired, you probably have a low enough income so that you can qualify and get a $0 payment. If I have a Parent Plus loan, whose income do I use? The parent or the child? So for Parent Plus loans, everything is based on the parent's information. This means that it is going to be based on the parent's income, and forgiveness under PSLF will use the parent's employment. Even if you come to an agreement with your child where your child is the one making the payments, everything is based on the parent's information. Do I need to certify that I work for an employer if I already turned in a form? So when you turn in a form, you'll get credit up until the date that form was signed. After that, if you did any more work with that employer, you have to turn in a new form to prove that you kept working. I see some people are asking too, it seems like they've already started this process and they're wondering, if Savi can help them. Yes. So even if you've started the process on your own already, Savi can take a look at the past that you've already done, make sure that you've already gotten credit for it, and then moving forward, we make it easier because you've got someone there in your corner to help you navigate this process. We'll help you to submit future forms, ensure that you stay on track, and you get the forgiveness as soon as possible. And how does your marital status impact your payment on an income-driven plan? If you are married and you file jointly, your spouse's income will be used when calculating your payment on an income-driven plan. This is because your incomes are merged into one adjusted gross income number. If you are married and you file your taxes separately, they will use just your income when you enroll in these plans. Typically, this means that filing separately gives you a lower monthly payment. However, we cannot tell you how to file your taxes, and if you are considering changing your filing status, we encourage you to talk to your financial planner. Filing one way or another could mean that you become ineligible for certain tax benefits that would far outweigh the savings of your student loan payment. So we would encourage you to talk to your financial planner before changing your tax status. The payment that you see on your Savi account will be accurate to your situation, though, to show you exactly what your payment is based on your current situation. And one more question, just because I don't want us to run out of time, and I think this is a good transition. Someone says, where can I find these forms to get enrolled? And the good news is that Savi can help you to create and submit these forms to get enrolled. So let's transition now, talk about a little bit of how Savi works and how we can help you with these programs. As you have seen, there is quite a bit of information to take in, and it can be overwhelming and confusing to navigate on your own. With so many different programs, with so many different requirements to meet, borrowers face so many options and are likely left wondering, what is my best option? Thankfully, that is exactly why Savvy started and why we are here to help. Because with Savvy, we make the best path clear for you. In your account, You'll be able to see personalized repayment and forgiveness options that are tailored to your unique situation. You'll see things like what your monthly payment is on an income driven plan, how many payments count toward forgiveness, and how much forgiveness you can get. Savi also monitors for all the changes to these programs so that you don't have to worry about keeping up with the news yourself. Anytime changes are made, we notify you so that you can take advantage of any and all possible savings. Savi also reminds you when it's time to recertify each year so that you never miss any deadlines and you stay on track for forgiveness. One great benefit is that not only do we show you what's available, but we also help you to submit the forms so that you can quickly and easily get enrolled into these programs. Best of all, you can receive personalized support from student loan experts anytime you need it. If you have questions about your situation, you want to talk about your options, or you just need a little bit more help, you can reach out to our support team and get one on one help with your specific student loan situation. So, when you're using Savi, it's as simple as these three steps. The first step in our process is that you will start an application with us and provide some general information that allows us to run the numbers and see what you're eligible for. On step two, we will lay it out for you. We're going to show you every program and plan that is available to you so that you can weigh all the options and find the one that works best for you. Finally, on step three, we will submit the applications to enroll you in your selected plan and lock in those savings. Once you've got access to your Savi account, this is the main dashboard that you'll see. It's the hub for everything that you're working on. It's the homepage you see every time you log in and allows you to access all Savi features from the menu. When you're first starting your application with us, you'll do your general info application and provide all that info we need to show you what you qualify for. You'll start off by providing some family information, such as your tax and marital status, and if you have dependents. You'll then provide some income information, such as how much you currently pay and what your income is. This information allows us to determine your payment under different income driven repayment plans. Next up, you'll then be able to add your employment info. We will be able to check if your employer qualifies for PSLF so that we can help you to get credit for that time. You can search through our database of over 1 million employers and add them to your profile. We encourage you to add all current and past employers so that we can get a look at your entire situation and provide you with the most accurate estimates. After that, you can add your loans to your Savvy account. I saw several people asking, well, how do I know what type of loans I have? How do I know if I need to consolidate? And this is the step in the application that is most important for you. Once you've added your loans, we will be able to take a look, see if they are the correct type, notify you if you require consolidation. It really is a crucial step in the process. To add your loans, there are a few different ways you can do that. The easiest way is to sign in with the same username and password as your online servicer. You can also manually enter those details or upload something called your student loan data file, which is a record of your loans from the Department of Education. Adding your loans here does not take any action on them. It just gives us a glimpse into your situation to provide you with estimates. This will let us see things like your loan types, your balances, and your repayment history so that we can run those numbers for you. Finally, once you've entered all that info, you'll be able to see what options you qualify for on the results page. Our website will automatically recommend the plan that will save you the most and get you the most forgiveness. But if you want to see everything that's available, that's there for you to explore as well. Remember, these options are customized to your unique situation. So it's based on your specific family, income, employment, all of that. You'll see details like your payment amount, your forgiveness timeline, and how much forgiveness you can get. Once you take a look at all these options, you find the one that's the best fit for you and you're ready to continue, simply click the blue continue button to get started on your paperwork. At this point, you'll be prompted to enroll in a Savi plan. It is absolutely free to create your account, and there is no cost to seeing what options are available for you. With our do it yourself plan, you'll be able to see what's available, and we will provide you with instructions on how to enroll in your selected plan. But if you're looking for a tool to do the heavy lifting for you, you can enroll in our Essential or our Pro memberships to unlock more features. With these plans, we will digitally create and submit your applications so that you can quickly and easily get enrolled. We'll also monitor everything moving forward to keep you on track. And best of all, you'll get access to personalized support from our student loan experts. Our most popular plan is our Essential plan, which includes, again, that digital application submission, loan monitoring, and personalized support. If you're looking for an even higher level of service, we have our Pro plan, which includes benefits like an onboarding session, dedicated phone support, and all the benefits of Essential. We encourage you to check out what options you qualify for and then enroll in whichever Savvy plan works the best for you. If you do enroll in the Essential or the Pro memberships, you'll be able to digitally create your applications to enroll in your plans. If you're applying for PSLF, Savvy will create a form for each one of your employers and take care of getting it signed by them. Once it's signed, we will submit it for processing to student aid. Same with your income driven plan. If you're switching your repayment plan, we will create that form and submit it to your servicer to switch you over. Believe it or not, the number one reason that applications are denied is because they are filled out incorrectly. It's not because you didn't qualify, but because there was an error on the form. With the Essential and the Pro memberships, we pre-fill these forms for you to ensure they are completed correctly and have the best chance of being accepted. We actually have a 98% acceptance rate for forms submitted with the Essential and Pro memberships. After creating those applications, you can track their statuses on your dashboard. You can see exactly what step of the process each of your forms is on, and if any action is needed from you to get those forms to 100%. As you work through the application, if you have questions, we are always here to help. You can click Contact Support from any page of our website to access these resources. We have our Help Center, which includes articles on common student loan topics, frequently asked questions, and even videos that show you how to complete the application. If you have enrolled in the Essential or the Pro membership, you'll be able to reach out to our support team and get one on one help with your specific situation. So, if you're ready to get started, here is how you can access your Savvy account. You can scan this QR code if you would like to sign up during the workshop. We have unique sign up pages for each of our partners. So, if you scan this QR code, you'll want to search for your employer's name to be redirected to their unique sign up page. If you're not able to sign up right now, don't worry. If you opted in, we will send you an email after the session with instructions on how you can activate your account by resetting your password. So either sign up now or check your email once we wrap up. Here's what that page looks like if you do decide to sign up now. You can search for your employer. You'll be redirected to their sign up site. Alrighty. So as we wrap up, I will leave you with these next steps. Be sure that you have access to your Savvy account by signing up or checking your email after the session. We encourage you to complete your application to see what you qualify for. And if you have any questions, consider enrolling in Essential or Pro and reaching out for personalized help. So that's everything we've got for you today. I appreciate your time and I hope that you have found this session useful. With the time that we have left, I will do my best to answer as many of your questions as I can. Someone says, all of my loans are direct. Should I still consolidate for the adjustment? Great question. So if you have all direct loans, technically you are not required to consolidate. However, it could be beneficial for you to consolidate if you took those loans out at different time periods. So if you have loans from, let's say, undergrad, and then a few years later you took out loans from grad school, those loans have different payment counts. This means that if your loans do have different payment counts, they would be forgiven at separate times. As a benefit of these account adjustments, if you were to consolidate loans with different payment counts, they apply the higher one to your new loan so that they can all become eligible for forgiveness at the same time. I see a couple people are asking some questions about the prices of the premium Savvy memberships. So, some employers do offer discounts on those plans, but typically it is no more than $70 for the essential membership and $150 for the pro membership. We encourage you to access your account and check out those plans to see what the specific cost is for you and if your organization offers any discounts on those plans. Those are also yearly. That's not a monthly. It's a year. And there is a money back guarantee with that as well. And you can see all of those details and more by clicking that select a plan button from your dashboard. Someone says I have FEL consolidation loans at a low interest rate. Should I consolidate them to a direct loan? I would recommend doing so because that will make you eligible for the account adjustments and eligible for more repayment plans. When you consolidate, your interest rate is not based on the current market rates. It's based on the combined weighted average of the loans that you're consolidating. So for most people, your interest rate will not change very much. Especially with these account adjustments, you can consolidate, become eligible, and keep credit for all the past payments that you've already made. Do I have to consolidate to qualify? You are only required to consolidate if you have FEL loans or Parent Plus loans. Do I have to print out the form and send it to my employer? And where can I get that? If you use Savi, you do not have to worry about printing out that form or getting it completed by yourself. In your Savi account, we will create the form for you, send it to your employer to be signed, and submit it so that you don't have to worry about printing it out, faxing it, any of that. We will take care of all of that for you. A couple of people are asking again about the Parent Plus loans and whose information to use. These loans can be confusing. So if you have a Parent Plus loan, everything is based on the parent's information. So if you, the parent, have the loan, you need to use your income and your employment info. Even if your child is the one making the actual payments, all of these programs are based on your information. So you'll need to enter that into the Savvy application as you work through it. Someone says, I chose the DIY, but I'd like to change. You can click select a plan from your Savvy dashboard to upgrade to Essential or Pro if you would like. Let me go back to that page for you. I don't have a picture of the button, but on the Savvy menu in the left-hand side, there's a button that says select a plan from your dashboard. Right here, you can click that and upgrade to one of our premium plans if you would like to do so. My Savvy account says provide general information. Yes, the general info application is what we use to collect the info we need to provide you with estimates. So back on your dashboard, this general information application is what you'll complete to see what's available. Uh, this is a little bit of an older picture that says 2022. Now it would say general info 2024. This allows us to see your current situation and show you those results. Is there a yearly cost for joining Savvy? Again, it is free to sign up and there is no cost to seeing what's available. If you would like to unlock more features like digital application submission and access to support, you can enroll in one of our yearly memberships, which is the Essential or the Pro memberships. And how can I reach support? You can click Contact Support from any page of our website to reach out to us. Remember that talking to support is a premium feature, so you will need to be an Essential or a Pro member in order to get that personalized help. What are the costs again? Some employers do offer discounts, but typically it's no more than $70 for the Essential or $150 for the Pro for those yearly memberships. I worked at a for-profit medical organization. Does that qualify? So unfortunately, for-profit organizations don't count. Only nonprofits or government organizations. If you would like to see if your employment qualifies, though, you can add your employment to your Savvy account. We will check to see what type it is, and we will get that time certified if it qualifies. Alrighty, I know there are a couple of more questions in the Q&A, but we are getting close to time. We've got just under a minute left. So I just want to wrap up and say if you have a question we were not able to get to, I sincerely apologize, and I would really, really encourage you to access your Savvy account. There's a very good chance you could find the answer just by going through the application. But if you still have a question, you need some assistance, I would encourage you to enroll in the Essential or the Pro plans, reach out for support, and we would be more than happy to help. Some of our support team was on answering your questions today, so you might even see some familiar names when you reach out. So that's everything we've got for you today. Thank you for attending. We really appreciate your time. We hope you found it useful, and we look forward to working with you and seeing you on a future workshop. Have a great afternoon, everyone.